I think we're going to deal with these problems because the thing that amazes me, and I think economists, of which I am not one, are very bad at explaining it, is why when we went into COVID, supply and demand for all these different sectors, which are now stricken by supply chain crisis, why supply and demand balanced? Then we went into the great dip of COVID and we recovered more or less, depending on where you are, to where we were before we began, and nothing balances anymore. I mean, there was a day when even things like gas markets were purely national. Now it's a global crisis. The shipping crisis is a huge crisis. China's power crisis is mirrored in the UK. And I can go on and on and on. And of course, in the background, we have those nice people in Russia who are turning off the gas taps because they want to screw Ukraine and probably screw the rest of Europe into the bargain so that they can get the North Sea pipeline open. So, I mean, there are so many things playing out here, but the thing that really amazes me is that the supply chain crises, which are really demand and supply crises, a lack of balance, have actually come to the fore after the pandemic in so many sectors in ways which I think are durable. So they will cause inflation, which is not, inverted commas, transient.
If we talk about the next few weeks, we've got earnings season on the ticket. The market's already been volatile for a number of weeks. If you look at some of the earnings already, I mean, ASOS here in Europe this morning talking about 200 basis point change to their gross margins. Out of the United States, we've seen fairly large swings in single stocks on the back of profit warnings. The likes of FedEx moved aggressively, and also Nike, as they've updated heading into the earnings season. What are your concerns around margins and the supply chain pressures? What it's going to mean for this earnings season?
Well, I think where I come out is this. If you look at demand after COVID, as soon as demand is freed up, as soon as you can go to restaurants, as soon as you can buy manufactured goods, go out and shop, then you get excess pent-up demand, which fuels a kind of spike in demand. And that, of course, fuels profits. Now you've gone over the top. In other words, how many restaurant meals can you eat? How many holidays, vacations for those who are watching from the other side of the world can you actually take in a year? And the answer is once you've done it X times, you've done it. Now, once that happens, then the demand starts to converge towards a trend growth rate, which I suspect is much lower after the pandemic than before. As that trend growth affects the top lines of companies, the costs do not stop going up. And the reason the costs do not stop going up is because we have all these supply chain disruptions. So you get an immediate profit squeeze, which surprises everybody and should surprise no one. It is actually the mismatch between the costs, which are actually affected by supply chain disruptions, and demand, which once excess pent-up demand is sated, you get a decline in the growth rate, which actually becomes negative until you reach a low trend line of growth.